Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Where you can see my list is getting smaller and smaller of current buy recommendations. That usually happens in a weak market. And if you look at the advanced decline line, you'll see that more stocks are going down than are going up. But let's get into it. I wanted to do a review of my current buy recommendations. So let's get into it. I've been suggesting being short the S&P 500, and I've been bearish because you can see seasonality was definitely in a downtrend, but that's going to turn now. It's going to turn into a seasonally strong fourth quarter. Santa Claus rally, all that stuff, even though Santa Claus didn't come last year and didn't come the year before. So I'm pointing out seasonality. Seasonality is only a tendency, but it is one thing in the favor of the market going higher. If we look at the S&P, here we had a bearish engulfing pattern, not last week, the week before, where it totally engulfed the prior week's uh, trading range. And you can see on the last bearish engulfing pattern that we had a pretty big decline in some of the previous ones that turned into big declines. So, um, the potential is there. We have a big, what would that be? Almost, I don't know, a uh, 18-month negative divergence where prices have hit all these higher highs and we got lower highs on our relative strength index, which is measuring the underlying intensity or strength of the stocks as the market is going higher. So that is flashing a caution sign to me. We also have a 4.5 year one on the a negative divergence on the monthly chart that goes all the way back to 19 uh, 2000, actually. I think 1997. And so all that stuff is in the back of my mind. It's hard for me to be overly bullish, but I certainly want to get, um, if the market has more gas over the next month or so, I definitely want to be, don't want to be short the market. But so that is, but here's what's going to tell us. So, we got this bearish setup on our weekly chart. So this is a 3-year chart. So the longer the chart is, and you see something like a bearish engulfing pattern on a weekly chart, uh, usually the more accurate it is than a short-term chart. But if we look at the short-term chart, just back here, just a couple of months. And so this is each one of these bars represents 2 hours of trading, and this goes back about 2 months. Whereas the previous chart, each one of the candles represented a week of price action. This is 2 hours. This is an intraday chart. And so we got a potential head and shoulders top, bearish head and shoulders top. It's like a man or woman, right side up. And we got a left shoulder, we got the head, we got a potential right shoulder, but prices have to come lower. So this is not intact. This is just a potential bearish pattern. So, we'll see. If we get a lot of weakness next week, then maybe seasonality isn't kicking in here and the bearish stance will be good. But on a really short-term basis here, like 3 days, we're getting a lot of chop sideways. And as this is developed, it's dawned on me that, this chop is a potential triangle, A, B, C, D. If we just about at an E, and then we have the necessary touches. Now, triangles are normally continuation patterns, meaning that this was in an uptrend and we'd have one more poke. And the other thing a triangle tells us, they're usually, according to the Elliott wave theory, fourth waves. And so if we do get uh, up leg, that would be the fifth and final leg before we'd get a much bigger correction. So I know that's a lot to digest. The This confluence of moving averages gave us a This might be too much information, but for some of you, it may not be. We got a bearish rainbow convergence. And so we were going to see the test on that retracement back up to the convergence. And we broke above slightly for a couple of hours, but weren't able to hold that. Normally, this promises a new lower low. So that would get our head and shoulders bearish pattern intact too. So there's a lot going on. Being bearish with such uncertainty is not a great place to be, but I'm going to stick with my 6,700 stop. So as long as prices stay below that, I'm bearish. If we get some, huge upside move through that, I'm going to go neutral. So um, that's the S&P 500. So this is I've been bullish on commodities for 18, 20 months. It's been way outperformed the U.S. stock market, things like gold, silver, platinum. Um, and This is a broad index with 50% energy. Now, you're probably aware that oil prices have not gone up. They've gone sideways the last couple of years. So this being energy heavy, this is a nice big 2-year symmetrical triangle with these two converging trend lines coming together after a big up move back in 2001 and 2021, 2022. And so, we've had slight breakouts, but it hasn't been absolute or been, really impressive. It's kind of meandered around here. So if it's able to, as long as it holds 21.5, I'm bullish on this pattern. If you measure the base of the pattern, project that upward, you come up with 3084, which would be about 35% higher. So that is something that I'm monitoring. The point and figure chart is on a buy rating, and this pattern looks, it's legit. I look at these things without a name on it. Here's the point and figure chart. We got a bullish trend line in place. We got breakouts here on our buy columns, the X columns, and we have a $27 price projection based on the point and figure chart, which is less than on the previous chart that I drew with the candlesticks. But this is this is nice to have a confirmation here. Verizon, this is one that was a perfect setup. We had this beautiful symmetrical triangle, these two converging trend lines. It was just an ideal chart. We went bullish. It really took off like it should have. I was saying to sell some on all these up days, and then we came down and we were testing support, and then we broke it big time, and it broke my stop, and I got stopped out here with the black arrow for a 5% loss. And then 2 days later, I went bullish a little bit at a little bit lower price because we were right at the apex of this triangle and it broke down. So then looking at this, I'm like, I'm just going to stay with this because what we basically have here is a trading range. This is the resistance, this is the support. And so why would I sell something at the support? To sell that, I want to see a break. I want to see prices down at 39 and then I'll throw in the towel. But until that, I'm going to hold this. It does pay a 6.5% dividend. And the point and figure chart is barely hanging on here. So this will really confirm a sell signal. If I see this, and we're on the cusp of that. So if I see the point and figure bullish blue trend line break, it will be enough to get me out. Hope that makes sense. And here's corn. Speaking of commodities, the grains have been in the news a lot with all the Trump tariffs and everybody, all the farmers complaining. It's kind of the perfect setup of just the ultimate bearishness on something. And as a market technician, we look at sentiment as a real important indicator. When people are overly optimistic, that's a time to be careful. Like NVIDIA, for instance, I'd have a hard time buying that for any length of time. I could probably trade that, but you don't like when it's a real crowded trade, but you do like when everybody's thrown in the towel and everybody's kind of kicking, uh, grains. So this was just a very small pattern that I got involved in, an inverse head, bullish inverse head and shoulders pattern, head, shoulder, shoulder, head, shoulder, neckline. We broke out, it broke down. I'm staying with my buy rating. This is the bigger chart of corn, which I'm not going to cover tonight, is, corn's been in a decline for like 3 years, 3 or 4 years. And so, again, the sentiment is really low, but the bullish thing that I like here is that I see a up, uh, five wave up move in corn for the first time. That started back in August. According to Elliott wave theory, that means the trend is up. Now, since then, since then, we got a three-wave decline, and that's how declines go within the Elliott wave theory. If the trend is up, you get five waves. If it's a pullback, you get three waves. So if this is wave one and this is wave two, we'd be entering a third wave. And what do we know about third waves? We've participated in a lot of third waves of big winners. China, cannabis, platinum, uh, gold miners, a lot of different things. If we're entering a third wave, third waves are the most intense, they're the most profitable, and we want to be in front of that. So I'm going to be patient with this. I know nobody else is bullish on corn, and I kind of like that. One of the major reasons why I'm bullish on corn is because we're going into seasonality that is really strong. From now until June of next year, but especially here into year end. So bullish on corn. Okay, do I got these backwards? Couple that I got stopped out on. Chevron, nice symmetrical triangle, um, which I had to redraw. So I bought here. We got stopped out with the break there. I'm still neutral. I want to get back involved, but I'm not yet. And I'm going to show you the short-term chart now. This part right here. And here we are. I'm sorry. Short-term chart here. And we have this is a daily chart. So each bar represents a day. We have a confluence of moving averages all coming together above the price. And that is called, and prices have come back towards that convergence. So this is a type 2 bearish convergence where prices come back. If it can't break through, which it looks like now, it promises a lower low. Promises a lower low. It normally happens. And then I take a look at it again. But if it can break through this, I would turn bullish. So I'll keep you posted. All right. Sorry about these being out of order. Last but not least, we were stopped out of Antero Resources. Here was the buy. Here was the stop. Ouch, this big down day. I haven't gotten back involved yet. I'm still watching this. The larger pattern is still somewhat intact if it can get going to the upside, but we were stopped out for a 10% loss on this. Ouch. But that happens, and we'll keep an eye on it. So thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Have a great evening.